Hello and namaskar, dear listeners. Welcome to our commodities audiocast, where we bring you the latest updates and insights from the ever changing world of commodities. I'm your host, Ravindra Rao from Kotak Securities Commodity Research Desk, and today we are going to dive deep into the key events and trends that will shape the tone for commodity futures markets in the week. It has been a roller coaster ride in the market last week, with volatility gripping the scene due to uncertainty surrounding the Federal Reserve's next policy move. As widely expected, the Fed raised interest rates by 25 basis points, marking the highest rate level since 2001, now ranging from 5.25% to 5.5%. The Fed has kept the door open for another rate hike with decisions based on incoming data, financial developments, and pursuit of a 2% inflation target. The aftermath of Fed Chair Jerome Powell's post policy remark caused a sharp retreat of the US dollar to 100.55. This sparked speculation that Federal Reserve might be nearing or reaching the end of its tightening cycle. As a result, traders adjusted their expectations, lowering the odds of further monetary tightening in September. Despite this dovish sentiment, positive US economic data indicated persistent price pressures, leaving room for possibility of additional rate hikes and leading to a remarkable rebound in the dollar index to 102 levels. Notably, unemployment benefit applications fell to a 5-month low and a second quarter GDP accelerated to 2.4%, surpassing expectations supported by a robust labor market. Across the Atlantic, the European Central Bank raised interest rates for the ninth consecutive time, reaching 4.25%. However, the lack of clear guidance from the ECB president left a dovish impression among market participants. On the price front, US dollar index seems to take resistance close to 102.50, which is the 60-day moving average resistance. On the lower side, 100.88 or to be precise, 100.80 would be a good support, which it had breached and went on to make a low close to around 99.50, and from there we have seen a rebound, and it has again once again breached 100.80 on the higher side. So the range that we are expecting would be 102.50 to 100.80. So breach on either side would give the direction to the dollar. As of now, it is looking slightly positive. So there is a possibility it might move close to 102, 102.50 in the week. Turning our attention to the shiny commodity, COMEX Gold slipped from its high to a 2 week low due to a positive US data, strengthening the dollar and treasury yields. Gold failed to breach the significant resistance level near $1984 per troy ounce. The precious metal found support near 1930, but the resistance still holds strong, shaping the trading range. In case of silver has once again failed to move about $20.50, and it fell sharply by around a dollar last week. Support now is near $24, which is the 60-day MA support. And on the higher side, the immediate resistance is pegged near 24.75, and above that, it might take resistance near 24.50, which it has been struggling to break. But from a short term perspective, it is still in a positive zone, and we might see a rebound anytime in the shiny white metal. Meanwhile, LME based metals held on to gains, fueled by hopes of China cutting interest rates, issuing infrastructure bonds, and easing property policies. Among the metals, zinc emerged as a favorite bet with the bullish engulfing candlestick formation on the weekly chart, which we have been mentioning in our last few audiocasts. In case of copper, price has once again moved above 740 on the MCX, and it is the highest since past few weeks. The next target the bulls might be eyeing would be close to 754, provided the support of 719 holds. So the trend seems a bit positive for this week. And if there is any surprise from China, we might see prices moving further higher. In the energy sector, crude oil prices continued their upward momentum for the fifth consecutive week. Supply tightness and an improved macroeconomic situation played significant roles in supporting the rally. We have mentioned last week that the crude prices might take off after the trendline break near 77.50, and this happened as crude witnessed an upward trend after breaking through the falling trendline resistance of $77.50 per barrel. The momentum indicates a potential target at $82.50, a significant resistance level worth observing. As we move forward, all eyes are on China as investors eagerly await concrete measures to support its ailing property sector. Consumer spending has taken a hit, and the property market remains uncertain, making this an important factor to watch closely. In the week, our radar will focus on key events such as China's PMI, the US labor report, and the Bank of England's monetary policy decision. The Bank of England is expected to raise interest rates by 25 basis points, with a possibility of a 50 basis point hike given elevated inflation. So it might be an interesting week, and the major focus will be on the Chinese data, and investors will be closely watching any stimulus coming out of China. We hope you found this commodity audiocast insightful and informative. As always, staying informed and tracking global developments are key to making informed trading decisions. Feel free to connect with us through your advisor or our social media handles if you have any suggestions, questions, or ideas for future episodes. Thank you for tuning in. Until next week, happy trading.